Hi, this is Michael Rony Mullick, and you're watching the Post Market Show. Today is the 20th of May, and it's a weekend. So let us discuss what happened in the markets today and how the US markets are trading. And so we have seen the markets have been again painted with green all around, and the Nifty ended almost 450 points up from yesterday, and Bank Nifty also similarly 960 points up from yesterday. So before you get too excited, the title of the show is Dead Cat Bounce. Now, why I have chosen this title and the meaning behind this is it's actually a term. Dead Cat Bounce is a US term for the stock markets. So the idea is if you drop something from a huge height, so the moment it falls down, it will going to bounce a little and then it is going to stop on the floor. So the same thing is happens when the markets are in a downtrend. So sometimes in a continuous downtrend we see some sudden up moves in the market, but then again it continues its downward journey from there. So that is why the term dead cat bounce. So that is an interesting term. I thought I'd share it with you. So why a dead cat bounce? So since everything is looking very positive, but before you get too excited, hold on till we discuss the US markets and where it is trading currently. So we will going into that discussion, but first let us discuss what happened in the market today. So starting our discussion with the Nifty levels, obviously Nifty and why it has shown such a big move today. So talking about Nifty, let me open up the 5-minute chart of Nifty. So yes, Nifty chart, it's gonna you can see that the Nifty has opened with a huge gap up 16,000 and above. So Nifty actually opened at 16,003 levels. So we were expecting that the market can take resistance at 16,000, but interestingly the markets opened above 16,000 level. From there it continued upward rally around 11:50 to 12 o'clock. There was a bout of selling, but then the markets continued its upward journey, ending the day almost at a day's high. So this kind of rally is again we have seen just the day before yesterday. We have a very similar picture. We can see that on 17th of May we had seen a very similar picture. The markets opened and then there was a huge rally, but then there again it was a gap down just yesterday. Now it's again up. So this kind of rally is purely due to short covering. People who had created shorts, huge shorts, we were discussing in yesterday's show and the morning's show as well, that people had huge amount of short positions. They had sold Nifty futures, they had bought put options, sold call options aggressively right across 15,800 to 16,200 levels. But then the markets opened above 16,000 and it continued to trade above that. That is when the short covering rally started and the markets kept on moving higher towards the very end. So this is how the markets have been. Bank Nifty is also a very similar picture. So it opened with a huge gap up, then ending the day almost with almost 960 points up from the day. Now closing at 34,276, and Nifty is again close to 16,266. So that is something the markets. Now why the rally? It's an interesting question. You'll be obviously asking why is the rally today. So everything was very flat yesterday, but then in the morning the news came that the China has decided to lower their rates of long-term interest. So long-term interest rates were cut more than expected. So that induced a very positive sentiment in the Asian markets, and followed by that the US futures were up as we see on the as we have seen in the morning, and from there the Indian market has also shared that same enthusiasm and it went up and up, and that what we see now. You might ask that the China interest rate has been cut, so why the impact on the Indian markets? So the thing is that there is a basket of stocks. So whenever someone from the US, let's say they want to invest in the Asian markets, so they usually don't choose a particular country, but usually they invest in a basket of stocks. So whenever someone sees that the China has lowered their long-term interest, cut their long-term interest rate, so they will be investing more money in that, and a part of that will be coming to India as well. So that is how the markets have reacted. So we can expect that that is why the Indian markets also share the same enthusiasm. So talking about the other things about the market today, we will see that the major contributor to Nifty is the Reliance Industries, obviously. So today, Reliance Industries moved up by almost 5.8%, almost close to 6%, contributing almost 114 points for the Nifty's up move. So that is something very interesting. And talking about the other shares which contributed was Reliance, HDFC Bank, ICICI Bank, HDFC, Infosys, L&T. So you can see that mostly the banking sectors are up. The some of the IT sectors are up. So this is the kind of push that got Nifty into such a level. So that is about the Nifty's view. So talking about the other sectors, what happened is most of the sectors are painted in green. So all of the sectors again ended in green today. And the major sectors which outperformed today was the Nifty Metal, Nifty Reality, and Nifty Media. So these were the top gainers, almost gaining 4.4% plus in all these sectors. And Nifty FMCG is again at an interesting level. If you look at the hourly candle, in the daily candle in the Nifty FMCG sector, we can see that it is close to the high it made on 19th of April and 29th of April. So if this high is broken, we can expect that the market can rally towards the high it made on November. And that can be possible because we are seeing that ITC is going very, very good movement. Hindustan Unilever, very strong. Britannia also very strong. The FMCG sector it's a defensive sector, as we have discussed many times before, and they do well during these kind of situation. So this is Nifty IT and the observation I've shared with you. And talking about the other stocks for the day, there was not much to talk about. We talked about Reliance, and the others were two stocks, Container Corporation and Godrej Consumer Products, declared the Q4 results, which was not good, and the markets have punished the stock. It is down by almost 5%, both the stock. So this is what has happened in the markets today mostly. Now talking about the FII DII selling activities, we see that the FIIs continue to sell, and they have again sold for almost 1265 crores for today. And DIIs have finally able to outmatch the selling by FIIs, buying about 2148 crores. So that could have helped the Nifty to move even higher. So that is something interesting, that the DIIs have actually crossed the sales figures by almost close to 900 crores. That is good. Now the all important the OI analysis. So we are looking at the option chain, the open interest chart for the 26th of May expiry, that is the next Thursday expiry, which is again a monthly expiry. So it is again a very important expiry. So today we see that in Nifty we have continuous call build-ups right from 16,200 to below. So, and the highest amount of puts being written is at 16,000 levels. So 16,000, 16,100, 16,200 have added huge amounts of put OI. Yesterday we were seeing huge amounts of call being written, but now we are seeing huge amounts of put being written. So in a matter of 1 day, 6 hours of trading, we had see a completely opposite picture of what happened yesterday. So this is what is called again a classic textbook example of short covering. People who had sold call options across board from 15,800 to 16,300, they got in huge trouble today when the markets opened with a gap up, and then they had to manage their positions. They had to sell additional put options, and that is why we are seeing huge amounts of put being written over here. So that is why, and we interestingly we see the total amount of put build up is highest at 16,000 levels. So that is something to almost 79 lakh contracts of put options has been written at 16,000 levels. And talking about the call options, people the highest call option is at still 17,000 levels. Today addition was 16,700 and above is where the call options were written. So people are expecting the markets to move even higher. Talking about the put call ratio, it's at 1.02. So it's almost the same amount of call and put being written after many days. And talking about Bank Nifty, again another similar picture. Bank Nifty is just at 34,300, but we see just 300 points below 34,000 has the highest amount of put build up. So people are expecting Bank Nifty to take a very strong support around 34,000. That is why we see almost a huge amount of the value is almost 26 lakh contracts are being written at 34,000 level. So people are expecting the market to take support around this and move higher. So same story in Bank Nifty. Put options have been written very, very aggressively, and call options are very, very less given the yesterday when the market was in a very opposite picture is what we had seen. So in a matter of days, things can change drastically. And so before you get too excited, let me show you how the US markets are trading. And now is the worst part. So US markets are trading deep in the red. So right now, if I open up the 5-minute candle, you will see that the markets are actually, after it had opened with a gap up. People expected the markets to move up, but then there's a continuous selling in the markets. S&P 500 is down by 1.6%. Nasdaq is down by almost 2.5%. It showed just 10 minutes before it has a strong green candle. Let's see where it ends. But right now it's absolutely bearish, and Dow Jones same 1.3% down. So very interestingly, if you want to know the Dow Jones is now, if you look at the weekly chart, it has continued to fall for the last 8 weeks in a continuous red candle for the last 8 weeks. So this kind of bearishness has only been seen in 1932 when we had the Great Depression in US. That was the only time we had seen consecutive 8 days of bearishness in the Dow Jones Industrial Average Index. So almost 90 years after, we are seeing the same kind of bearishness in this index. So this has never happened during the the COVID lockdown, during the 2008 Lehman Brothers collapse, during the 2000 .com bubble. We have never seen such kind of bearishness in the Dow Jones index. So that is, again, records are being broken left and right in this market. So that is about how the US markets are trading. And obviously, since the US markets are trading so badly, the SGX Nifty is showing a gap down of almost 250 points. At one point of time, it was showing a gap down of almost 300 points, and it was had made a bottom of 15,950. So that is something absolutely scary. So the people who had sold put options will be in a major panic situation if the market opens with again a huge gap down on Monday. So again, we can see that it can have a cascading effect when people who had went long will try to cut down their losses, and that can propel the markets even lower. So that is again, we are seeing a repeat of what has happened. So one day the market gap up, next day gap down, and it is not just by 50 or 100 points. It is 400 points, 500 points move are being seen on regular basis in Nifty and Bank Nifty. Bank Nifty is even more volatile. 1,200 points move are being seen on a regular basis. So this is the thing. So don't get too excited. Wait for the US markets to end, and let's hope there is some kind of recovery towards the end. If that does not happen, we can expect again a very, very bearish view on Monday. The markets can fall even more on Monday. So again, an interesting pattern if you see in Nifty. So this is the hourly chart in Nifty. You can see that the markets are there's a gap up, gap down. The chart is full of gaps, and you can see that the market is making consolidation over a period, and then it is breaking that zone, and it is again consolidating and again breaking that zone. So this has been the picture for the last this is from actually 4th April. So the entire April month to almost the May month is almost over now. So last 2 months the markets have been like slight consolidation, then breakdown from that level, again consolidation, and again breakdown. So unless and until this level is broken, so for the time being 16,400 level, if the market closes above 16,400, we can turn slightly bullish, but we have to make sure the market closes above 16,400 for one day, and then we can expect further up move. Talking about the up move, we have the nearest resistance is at 16,400, which we talked about, and then 16,480, and if that is broken, 16,631 is the next level where the market will take resistance. So market has multiple resistance, and if that is broken, 16,800 is where this 200-day moving average is for Nifty. So lot of resistances going up, but as the things look right now, things look bearish. So we can expect the markets to open around 16,000 or maybe less, depending on the US market where it closes actually. So there is still almost 2 hours left for the US markets to close. So till then, we have to see what's going to happen by the markets end. So with further updates where the markets have ended, we will join again for the Sunday's week ahead show. So we will discuss about where the US markets have ended and if there was any major developments during the weekend. And also we will discuss in the next week what kind of major economic data will be announced, so that you can trade with a good conviction and have proper information about what's going to come in the upcoming week. So with that, I will end the post-market show here. Thank you for watching.